VA loans require zero down when buying the property, but that doesn't mean $0 down when buying the house. You see, you're still gonna have closing costs that you have factored into everything, so that's something you're gonna need to be aware of. And in today's video, I'm gonna go over everything you need to expect when it comes to VA loan closing costs. Now, I want you to pay attention to this video, but at the very end of this video, I'm gonna share with you one secret tip on how to lower your closing costs tremendously and possibly even get rid of them altogether. What's going on, motivators? My name is Dustin Chermak. I'm your VA loan advisor, and this is all I do is I teach you everything you need to know about using your VA loan. Before we go any further, make sure you subscribe to my page because I have a ton of useful info about using your VA loan and everything you need to know, and it's super helpful for you to subscribe to learn all about it today. I'm also licensed from New York all the way to Cali to help you out when you're looking to use your VA loan. So you can reach out to me at any time. But let's go right into it. Closing costs are a real part of buying a house, and if you're not prepared for it, they can severely catch you off guard and even derail your process. And in some cases, they might even lose you money because you might enter into contract, and guess what? You find out about closing costs and you don't have the money for them, you still gotta buy the house. That will possibly lose your down payment. So if you don't want to lose your down payment, make sure you listen to this video. All right, so let's go over what closing costs are, how much they're going to be, and what we can do to reduce them. So closing costs are costs that are associated with purchasing a property. They can range from lender fees to title fees to prepaids and even some third-party costs. So you're going to have attorney fees, you're going to have an appraisal fee, you're going to have an inspection fee, you're going to be paying for your insurance, you're going to be paying a recording fee, title fees, origination, processing, administration, oh my God, where does it all go? All right, don't want to overwhelm you, but let's break it down really simply. Now, closing costs can range from about 3 to 7% of the total purchase price that you're buying. So if we stick with $500,000, in theory, your closing costs could be anywhere from $15,000 to $35,000. Now, in some states, this will really vary. In states like North Carolina or Texas, maybe, you're gonna have closing costs that are a lot cheaper. That $500,000 property, the closing costs might only be like 10 grand. But you go to a state like New York or California, where there's a lot of much more urbanized environments that have higher cost areas, you could look at spending $30,000 on your closing costs. Now, to top it all off, closing costs will also vary by which lender you choose to work with, which title company you choose to work with, which real estate agent you choose to work with, and which attorney you choose to work with. So a lot of this stuff is things that are kind of within your control. Now, closing costs really consist of three main things. Number one, title fees. Now, title fees are really kind of a dime a dozen. Title companies, technically you can shop for a title company and choose which one you want to work with, but for the most part, they all tend to be within about $200 or $300 of each other. Whatever it costs to do the title work on a property, and title work, I explained in a prior video exactly what title work is, but basically, if you were an individual and you have a medical record, a background record, a criminal record, a credit record, it's all of the same stuff, but just for a house instead of a person. So a company has to do all of the searches for all of that work, and they also have to make sure that they update all of that title work for the house. It has a chain of record of who owned it and when, so these costs can be pretty significant. They make up about 1/3 of your overall closing costs. Now, number two is escrows. And escrows, you're actually really not losing money because it's just money in one hand and out the other. Now, what escrows are is escrow is a bank account set up for your property taxes and your homeowner's insurance. So what we do as a mortgage lender is we collect anywhere from 2 to 12 months of those things up front. This way, we can make sure that we have an escrow account. Because when you pay your mortgage payment, you're paying for your mortgage, but you're also paying for your property taxes and your homeowner's insurance at the same time. Now, you can waive escrows, but that's a whole nother story. 95% of people don't do that. Most people pay their escrows within the mortgage, and that can also make up a full third of your closing costs. So if you are buying in a state where there's $12,000 in property taxes on the house, you can very easily expect a bill of about $6,000 or $7,000 in closing costs. But like I said, it's your money, it's going to the property taxes. So it's not really like a cost that you never see again. It's just in one hand and out the other. Now, one of the other parts of that is lender fees. Now, lender fees can significantly vary, okay? Depending upon which banking institution you go to, they will start off between $1,500 to $2,500. Now, this makes up for processing, administration, underwriting, credit pulling fees. There's a couple other fees in there, but those are the four big ones really that you'll see lenders have, and they can range anywhere from that $1,500 to $2,500 mark. Now, me personally, I have an awesome arrangement with my company where I actually don't have to charge veterans any of those fees. You see, we call them junk fees, and when I came over here, I was able to negotiate to get rid of all of them for all of my veterans. So on average, I save each veteran who works with me $1,985 per transaction, guaranteed no matter what. Because processing, administration, underwriting, credit fee, we don't charge them. We give a lender credit right off the bat. So shameless self-promotion, work with me. But anyways, let's say you're working with someone else, you're going to have those fees in there. Now, one of the other fees is points. Now, points are called discount points, origination credits, lender credits, borrower credits, origination fees, origination charges. There's like 6 or 7 different monikers that any lending institution can give to them, but they all mean the same thing. Just think of them as points. That or upfront interest. Now, it's upfront interest that sometimes they charge you just in order to lock the loan. So when you're going to lock the loan, sometimes you can pay more points in order to get a lower interest rate, but sometimes you have to pay points as part of a standard. Now, what is a point? Now, 1 point is 1 percentage point of your total loan amount. So if your loan amount was $500,000, 1 percentage point of that is $5,000. So 1 point, $5,000. So that can make up another third of your closing costs. Now, there are other fees as well, such as attorney fees and real estate agent fees and all of that stuff, but most of those are kind of brokered in and roped in with title and some of those other things. So those are the 3 things that make up your overall closing costs. Now, at the beginning of this video, I promised you that I would share with you a simple tip that you can use to reduce your closing costs. So here's the secret. It's called seller's concessions. Now, what a seller's concession is basically a seller agrees to pay a portion of your closing costs, and you are going to finance that. So, for instance, if your closing costs on a $500,000 property were $18,000, you could negotiate at the offering table a 2% seller's concession. This way, the seller is going to give you $10,000 back at the closing table. You're going to have a loan amount higher of $10,000, but instead of bringing 18 grand to the closing table, you're only going to bring 8. So this is a way that you can roll costs into your mortgage and save some money when you're going to the closing table. Now, keep in mind, you're still paying for it because you're financing it. But if you told me right now I could finance $10,000 over a 30-year period, I'm always going to take advantage of that. Okay, so as I said before, your closing costs can significantly vary from state to state and also depending upon what loan amount you're going to. Because as I said, it can be anywhere from, I said about 3 to 7%, but realistically about 2 to 7% of the total loan amount. So 2 to 7% can be a pretty significant area. If you wanted to use a general rule of thumb, you could stick with 5%. But like I said, if you're in states like North Carolina, South Carolina, Texas, Arizona, your closing costs are going to be significantly less than if you're purchasing in states like California, Washington, D.C., New York, because a lot of those states just really have a lot more charges. It's more expensive to live there. I unfortunately live in New York, and it is one of the most expensive states to buy a house in. Absolutely hate it. No idea why I live here. But anyways, as I said before, guys, these are what your closing costs are. They make up those 3 things: title fees, lender fees, escrow fees. And one of the ways to kind of circumvent and go around them is to finance your closing costs by getting a seller's concession. Now, if you have more questions on this video, make sure you subscribe to my page. My contact information is in there. You can reach me Monday through Sunday, 9 a.m. to 9 p.m. And if you want, you can start up an application with me and I'll get you approved and make sure that you are good to go when you're buying your VA mortgage. As always, make sure to like, comment, and subscribe so I know that you guys are out there listening and I'm doing this content for a good reason. Let's go. Motivator out.